Japan's government has released growth data for the first quarter of this year, and the numbers show the economy has taken a step back.
Japan's three biggest names in the auto industry announced disappointing numbers for the last quarter of the business year, and they're warning of rough waters ahead.
Rice prices in Japan remain stubbornly high. Consumers are struggling to put food on tables and retailers to put products on shelves at affordable prices.
The government has been trying to fix the problem with limited success.
Japan is currently grappling with what may be its most severe economic crisis since World War II. In Tokyo, angry crowds have taken to the streets outside government buildings, chanting, "We are not your ATM." The situation has become so dire that rice, long considered the heart of Japanese culture, has vanished from store shelves. Many families are surviving on nothing more than furikake rice seasoning, unable to afford proper meals. In a stunning and unprecedented admission that sent shockwaves through global markets, Prime Minister Shigeru Ishiba publicly acknowledged that Japan's financial condition is now worse than Greece's at the peak of its debt crisis. Let's take a closer look at what's happening on the ground. Japan, once hailed as one of the most advanced economies in the world, is now watching its purchasing power evaporate. Prices are skyrocketing while wages remain stagnant. Sales of furikake, typically used to make plain rice more palatable, have hit record highs because for many, that's all they can afford. When a nation that reveres rice can no longer afford it, something has gone deeply wrong. But the inflation crisis is only the most visible symptom of a far more dangerous underlying problem. At the heart of the crisis is Japan's exploding bond yields, which are sending tremors through the global financial system. The country's debt-to-GDP ratio has surpassed a staggering 234.9%, significantly worse than Greece's during the European debt crisis. Meanwhile, the Japanese economy is shrinking, and the public unrest we're witnessing may be just the beginning. Prime Minister Ishiba's words are worth quoting in full because they mark a pivotal moment in economic history. It's important to recognize the dangers of a society and a world with interest rates. The government is not in a position to comment on interest rates, but the reality is we are facing a world with them. Our country's fiscal situation is undoubtedly extremely poor. Worse than Greece's. Let that sink in. The leader of the world's fourth-largest economy is publicly declaring that his country is in worse shape than Greece was at its lowest point. This isn't political rhetoric. It's a desperate call for help. What makes this even more alarming is the scale of Japan's debt. While Greece's debt-to-GDP ratio peaked at 142.2%, Japan's has soared to nearly 235%. These are unprecedented figures in modern economic history. The crisis reached a tipping point in April 2024 when Japanese bond yields began behaving erratically. The yield on the once dormant 40-year Japanese government bond surged 11 basis points in a single day. Since early April, it has jumped 100 basis points, reaching 3.56%, a move so sharp it's been likened to a sleeping giant thrashing awake. When bond yields spike like this, it signals collapsing bond prices, and that's catastrophic for the institutions that have been stockpiling Japanese debt for years. We're talking about banks, pension funds, and financial institutions holding trillions in potential losses. These aren't paper losses. This is real money vanishing before our eyes. Japan's economy isn't just stagnating, it's contracting. In Q1 2024, GDP shrank by 0.2%, worse than the expected 0.1%. On an annualized basis, the economy declined 0.7%. What makes this moment especially dangerous is the convergence of multiple economic pressures, a scenario that eerily mirrors Japan's lost decade of the 1990s, but with even higher stakes. Back then, Japan entered a prolonged economic slump after a bubble burst in the early 90s. But there's a crucial difference today. Japan had far more fiscal and monetary flexibility then. Now, the Bank of Japan owns nearly half of the country's bond market. Interest rates have been near zero or negative for years, and the government's debt has ballooned to unimaginable levels. To make matters worse, a global trade war is piling on. The U.S. has imposed a 25% tariff on Japanese automobiles and parts, a devastating blow to a country whose economy is built around its automotive sector. Japan's intricate global supply chains are now under threat. With elections looming in July, Prime Minister Ishiba is cornered. He can't afford to accept a bad trade deal, nor can he allow tensions to escalate further. But the U.S. has made it clear, no special treatment. The tariffs apply to everyone. Japanese officials warned that if these tariffs persist, they could stall the entire economy. This isn't alarmism. It's a realistic assessment. Adding to the storm is deflation. While the US and Europe battle inflation, Japan is fighting the opposite. The country's producer price index has declined for 16 consecutive months. Economists call deflation economic poison because falling prices lead consumers to delay spending and businesses to cut investment, grinding the economy to a halt. And then there's the demographic collapse. Japan's population, which peaked in 2008, is shrinking fast. The working-age population has been declining since 2011. It's projected that by the end of the century, Japan will lose half its population. Incredibly, more than 30 million Japanese citizens are now over 60, more than the entire population of many countries. Japan lacks the social infrastructure to support this aging population. Most elderly depend on their children, but with youth unemployment soaring and economic growth slowing, that support system is failing. Speaking of youth unemployment, this may be the most destabilizing element of all. In urban areas, nearly 20% of young people can't find work. A record 11.8 million new graduates in 2024 entered a job market that had no place for them. Many have retreated into social withdrawal, a phenomenon known as lying flat. These conditions are breeding the kind of social unrest that topples governments. Mass protests have already begun, something virtually unheard of in Japan's highly conformist society. Last month, demonstrators gathered outside the Ministry of Finance shouting, "Demolish the Ministry of Finance," and holding signs that mocked Prime Minister Ishiba. One protester wrote online, "When I thought about children going hungry and rice seasoning being all many families can afford, I started screaming and crying." Japan is now facing a domestic rice shortage. Supermarket shelves are empty and prices have doubled. Rice in Japan is not just a food. It's a cultural, historical, and spiritual symbol. Not being able to afford rice is like Americans being priced out of bread. This is why Japan's crisis poses such a grave risk to the global economy. As the fourth largest economy in the world, Japan is deeply integrated into global financial systems. Its banks hold significant US and European debt. If Japan's financial system collapses, it won't be an isolated event. We could face a global financial crisis that dwarfs 2008. Yields are rising not only in Japan but also in the US and Europe. The combined pressure could cause a synchronized collapse of financial institutions worldwide. The parallels to 2008 are chilling. But what makes today's crisis even more dangerous is that the world has far fewer tools left. After a decade of near-zero interest rates and relentless money printing, central banks are out of ammunition. Government debt worldwide is at historic highs. In this fragile environment, a Japanese meltdown could trigger a global domino effect that unravels faster than any country can react. So, what happens next? Prime Minister Ishiba, leading a minority government since October 2024, faces re-election in July. His political survival is on the line. But Japan has almost no good options left. Interest rates are already at zero. The country is boxed in. And the world is watching. They're running out of options. Printing more money risks triggering a full-blown currency collapse. Cutting government spending would deepen the recession. And raising taxes could choke off the last remnants of economic growth. Economists call this a policy trillemma, a situation where every available path leads to pain, and even the least bad choice could still end in disaster. Over the coming weeks and months, keep a close eye on Japanese bond yields. If they continue to rise, the pressure on global financial institutions, many of which rely on Japanese bonds as safe, stable assets, will intensify dramatically. We are witnessing a crisis that's been 3 decades in the making. Japan's so-called lost decades never truly ended. They were simply papered over by massive government borrowing and relentless money printing by the central bank. Now, the consequences of those decisions are becoming impossible to ignore. The question is no longer if Japan will face a serious economic and financial collapse. It's already underway. The real question is how far this crisis will spread and whether the rest of the world is ready for the economic earthquake that could follow the downfall of the world's fourth largest economy. Things are escalating quickly. What once seemed unthinkable just months ago is now becoming more likely with each passing day. Japan's financial system is teetering on the edge of collapse, and if it goes, it could reshape the global economic landscape for decades. We're not there yet, but we're getting closer. And when it happens, it's going to happen fast. Please subscribe to Trade Talks, and thank you for watching.